that, one very important question to you, because when we talk about freedom, Nilesh sir, it comes with responsibility and freedom comes with accountability. Yes, we are talking about having the right kind of strategies. We are having the conversation about having the right kind of fundamentals when you want to achieve this particular goal, or at least start planning this particular goal or that phase in life where you want to be financially independent and free. But this also comes with becoming free from all the old myths or the kind of wrong suggestions, recommendations, which we are seeing lately, people falling into a trap a lot. We are going through a very important transition, a change where we are seeing SIP numbers reaching, month high. Every month, literally, we are seeing increased demat account numbers. Your folios are also going up. So looking at the investor interest and the trend, what are those things? Because knowledge is the biggest power and the only power that will take you ahead in life. And talk about your journey as an investor, the right kind of knowledge is important. So what would be those aspects of freeing yourself from all the fundamental myths or the kind of noise that we are hearing these days? Nilesh sir.
So Kavita, I just want to talk about three things.
Sure.
These are the myths which we must remove, and three things which we must adopt. Number one, no one in the whole world has ever seen money grow at home. If you keep currency notes weights at home, it doesn't grow. But there are many people in India who believe that currency notes will continue to grow at home. Between FY21 and FY23, Indian households put 4 lakh crore in mutual funds. 2 lakh crore was invested in equities, bonds, debentures. Total about 6 lakh crore. But 9 lakh crore was invested in currency notes, more than what was given in mutual funds or direct equity. Please, 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 all Indians, be aware that currency note cannot grow. It only depreciates thanks to inflation. Please get freedom from that myth that currency will grow at home. The second myth is I can become wealthy or I can make return without taking risk. In the same report which talked about currencies getting invested more than equities and mutual funds, if we do the breakup, 7% of wealth, 7% of savings between FY21 to 23 was invested in real return product, which is mutual funds, bonds, debentures, and equities. 93% of savings was allocated to currency notes, deposits, insurance, small savings, pension fund. As Dhirendra Bhai and Firoz will confirm, these products will either give below inflation return or marginally in line with inflation return. How can you become wealthy with that kind of asset allocation where 93% of your savings is not going to deliver real return? Of course, there is complexities, there is worry while investing in risk-taking assets like equities, bonds, debentures, mutual funds. But that's where you have guidance like Dhirendra Bhai and advisors, distributors like Firoz Bhai. With their advice and support, you will be able to invest for real return. Please, please, please invest for real return, even though it means taking some risk. The third thing, Kavita, again reinforcing how one decision can impact you. When we all started our career, the first investment from a taxation point of view was in public provident fund account and provident funds. If you invested 12,500 rupee each month for last 25 years in PPF account, that's about 37.5 lakh rupee. It would have grown to about 1.07 crore over 25 years when I last calculated it. That's tax-free in nature. But the same money invested in equity linked savings scheme over 25 years with 12,500 SIP will still require 37.5 lakh rupee to invest, but that would have grown to about 4.4 crore when I last calculated. That's taxable, remove tax out, and yet you gain 3 crores more on a 37.5 lakh rupee investment over a 25-year period. How many Indians have PPF accounts and PF accounts? And how many Indians have 3 crore rupees in retirement kitty? Just one decision of going for risk versus not going for risk creates such a big gap. So my only recommendation to investor, get financial freedom through regular investment. Little drops of water will make an ocean. Be a disciplined investor. Don't look at past performance and invest. Please invest in a basket of securities from debt, equity, real estate, commodity. Don't put all eggs in one basket. And finally, be a long-term investor. Jaldi ka kaam saitan ka hota hai. Investment is like birbal ki khichdi, pakne mein samay lagta hai. My humble submission to all Indians is, let's get financial freedom by becoming a regular investor, long-term investor, and disciplined investor.
Exactly.
If you like this video, then like, share and subscribe to ET Now.